presenting about the impact of current exchange rate on international business in Malaysia. In the past few years, the exchange rate for ringgit Malaysia versus foreign country has been declining. The impact of exchange rate volatility on international trade is an important issue in international economics. These studies investigate the impact of current exchange rate to international business in Malaysia. There is some evidence of exchange rate volatility to have significant impact on Malaysia real export and import. In addition, the impact of exchange rate volatility on real export can be negative and positive. The international business in Malaysia will be affected by the profitability of a Malaysian exported product decreasing due to increasing value of US dollar. The methods of this study are data collection that are being gathered from interviews, documents such as newspaper reports, and also observation from blog.
Assalamualaikum. My name is Nur Ashiki Metika Mamalik. I will present about the introduction of this case. Okay, Malaysia is one of the developing countries that have expertise in many ways, such as Malaysia have their own natural resources and manufacture products which contribute in the development of the economy. As we know, international business is referred to the other business transactions that involve within the governments that can lead to economic growth in which Malaysia do the business transaction with other countries. It is encountering all the commercial activity which involve in promoting transfer of goods, services, resources, people, idea and technology across national boundaries. Over the years, exchange currency has bad performance, which is our money are dropping. Malaysia must attract other countries to invest in Malaysia to sustain the economy. Today, in 2018, currency of Malaysia compared to US dollar is about 4 ringgit 80 cents, which is equal to $1. This is important case as when the currency exchange rate increase, it make the imports cheaper because strong currency will lead to a cheaper import, and a country tend to import more than export as it affect the economy. Hence, it is important to evaluate the relationship between currency exchange rate and international, as this sector can be one of the foreign investment in Malaysia.
I'm Norma Sarah. Will talk about the background of impact current exchange rate to international business in Malaysia. Each country has their own currency where the prices of goods and services are quoted. No matter what it will be current exchange rate, either it become rising or sliding ringgit, it will affect different group in our economy differently. There are some different group which is domestic producers and local exporters. These two groups will be affected when they start sell and buy goods and services to foreign countries. For domestic producers, some of them will not face the problem as long as the business expenses they buy just within a country. But for business who buy goods and services from foreign countries can be negatively impacted by a weak current exchange rate. The expenses of the business may be increased due to the increasing of dollars. Next, for local exporters, for those who create and sell goods and services to foreign consumers, probably can get benefit from a weak Malaysia currency. That means Malaysia company pay for cheaper production in ringgit and sell to the foreign business who are able to buy, so that there will be more sales. Simply put, a weak ringgit benefits for Malaysia local exporters to export goods and services to foreign business. But there is still a few of researchers who question which is better, either the exchange rate is low or high. Both have advantage and disadvantage depending on their significance.
Assalamualaikum. My name is Nurul Amira. I will talk about methodology. So our major problem that we get for analysis, firstly, is Malaysian ringgit versus foreign currencies has been declining. Secondly, about capital flows in the bond market also showed signs recovery after experiencing a large outflow of RM62.7 billion for the period from November 2016 to March 2017. Then Malaysia face higher interest rate and the currency risk that will test Prime Minister grip on power. Data collection focus on qualitative. The strength of qualitative research is its ability to provide complex textual description of how people experience a given research issue. The famous qualitative method is case study, which is the data collection from interviews, documents such as newspaper, also reports such as articles and observation from blog. The important data which is related would be gathered before analyzing it to become more meaningful and comparable data. Comparison method is used to compare the current of exchange rate between years is highlighted when analyzing data. However, the inflow foreign funds for the stock market also is being analyzed by comparing between years.
In methodology, the important data is which is related would be gathered before analyzing it to become more meaningful and comparable data. So comparison method is used to compare the current of exchange rate between years is highlighted when analyzing data. However, the inflow foreign funds for the stock market also is being analyzed by comparing between years. So a few of secondary sources is used to gather all the information related to the topic given. One of the secondary sources is by finding the information in the newspapers. Newspapers where we know that the information is surely valid as the references and data are important to prove its validation. So we find the information related in Metro on 19th of June 2017 that says about the Bank Negara Malaysia has introduced various measures to stabilize the ringgit Malaysia. The next would be article. So the article also important sources to gather the information needed, as the articles are mostly written by the logical thinking persons and based on the trustworthy foundations to be referred at. So we choose the article that written by Pui Kung Chong on 4th of January 2018, that title of Malaysia faces higher rates, currency risk and an electric battle. And next would be the information from blog. The blog also being used to refer in analyzing the currents of exchange rate. So the education blog, which is tutor2u.net, that discuss on the exchange rates, where macroeconomics effects of currency fluctuations, that the changes in the internal value of a currency can have important effects on several macroeconomic consequences, and objective are being highlighted.
Assalamualaikum. My name is Shazwi Nazati and I will continue the analysis part. Malaysia faces higher interest rates and the currency risk that will test Prime Minister grip on power and the way he control and manage it. According to the median estimate in a Bloomberg survey of economists, Malaysia has been benefited from a global trade recovery and a pickup in domestic spending, with economic growth probably reaching 5.8% in year 2017. The growth is seen moderating to 5.3% in this year. As with supplier payments, if the businesses sells products or service to a foreign country, then a change in the exchange rate will have a direct impact on the company's bottom line. The risk that can be occur is the prices might become uncompetitive due to the exchange rates fluctuations. An exchange rate appreciation causes a slower growth of real GDP due to the fall in net exports and a rise in the demand for imports that is an increased leakage in the circular flow. A decline in demand and output may cause job losses as businesses seek to control costs. The others are permanent if imports take up a permanently higher share of the domestic market. This can lead a higher exchange rate that might have a negative multiplier effect on the economy.
Okay, hi, my name is Afifa Adriana. I will talk about the analysis in this case. Average analysis today begin reviewing the projected value of the ringgit. Some say that the value will increase to the level of 3.8 ringgit per US dollar. Hence, we may have to rely on the fundamental law of nature as everything has its partner. In this context, every downfall must rise. Maybe that's what we are looking for in this foreign currency movement. In terms of technical analysis, it is likely that the ringgit has long been oversold. This is because the market sentiment was too negative. So it's time for the ringgit Malaysia to move toward consolidation Therefore, the prospect of ringgit is positive. In year 2017, shows a volatile dollar falling over 9% in January since Trump inauguration address to be a president of United States. This come after frequent statement by the president that the dollar needed weakening in order to make America more competitive, and the euro holding firm in the face of domestic election is its major nation.
Assalamualaikum, my name is Mela binti Azman. My metric number is 246980. Now I will present about the discussion on this case. The ringgit exchange rate is vital to Malaysia's financial sector and affected the others things in Malaysia such as cost of living. The impact of the current rate exchange to the international business. This bilateral rate is important in that was found not only to determine movement in the real bilateral exchange rate with the US, but it also has had a major impact on Malaysia's overall real effective exchange rate, which is called REAL. In early 1980s, that's the exchange rate of the US dollar and ringgit rate and the real diverged. The objective of this study is to understand the impact of the current exchange rate to the international business in Malaysia. On the years 2017, when the ringgit currency declined, the Bank Negara Malaysia took action to make sure that the ringgit currency can be increased again, because when the ringgit rate decline, it will affect the other currency in the exchange rate. For example, $1 is equal to 4.4523 ringgit Malaysia and 0.2246 is equal to 1 ringgit Malaysia on 17th of February 2017. The exchange rate of ringgit into other currency are such as 1 ringgit Malaysia is equal to 1 Indian rupees equal to 15.0601. The 1 Indian rupees is equal to 1 ringgit Malaysia on 17th of February 2017. Each of the country have their own currency decline and losses. The ringgit currency can be increased by the Bank Negara Malaysia, which they take an action, which 25% of the total export earning that has been invested in the foreign countries and encourage heading activities in local markets.
I will talk about discussion. You know that all transactions in business use US dollar as an indicator. As mentioned before, if the US dollar currency exchange, it will affect the currency of ringgit since all business transactions are in US dollar. Thus, it also will impact the international trade. If the currency of US dollar increases, US can purchase more in foreign country. They will pay less for import while ringgit suffer in paying and maintaining their import in international market. But if the currency fluctuates, the foreign country will benefit from it. The price for import is decreased as the currency of US dollar decreasing. The buying power from foreign country will also increase, and the currency will also increase since the economy rotates rapidly. Also, if the US dollar is strong, it will suffer the exporter since as foreign import become cheaper at home, the domestically produced goods become relatively more expensive abroad. Malaysia will suffer with buying imported product from foreign country. The best dollar policy is therefore one that balances the pros and cons of a strong and weak dollar, and that will take the economies of trading partner into accounts. The last point can be important. Ringgit is strong against the dollar, for example, will weaken the dollar.
US product will become more affordable to Malaysians, and Malaysians will encourage to travel to US. That's all from me. Thank you.
Okay. Hi, my name is Nazifa Mitanasir. I would like to explain about the suggestion. There are some suggestions to increase our country's exchange rate to enhance an economic growth of a country. To increase the value of our currency, we can try to sell foreign exchange assets and buy their own currency. For example, China has a lot of US government bonds. If they want to sell those bonds such as treasury bills and bring the return back to China, it can cause a depreciation in dollar of US. The supply of dollar will increase and the Chinese yuan will also escalate. Since China has a huge dollar asset, they can cause a significant fall in dollar value. Next, the escalation of interest rates. In one country, the higher interest rates can help the investor to get better returns than other country. A higher interest rate can attract more foreign capital, which can increase a demand for one currency. Thus, its exchange rate currency on a country indirectly will rise. However, if inflation in the country is much higher than in others, or if additional factors serve to drive the currency down, the opposite relationship exists for decreasing interest rate. That is, lower interest rate tend to decrease exchange rates. Okay, next, the exchange rate usually being determined by some complex factors that make them difficult to understand and predict. However, an investor should have some understanding of how currency values behave, because a currency exchange rate determines a portfolio's real return. A declining exchange rate obviously decreases the purchasing power of income and capital gains derived from any returns. Moreover, the exchange rate influences other income factors such as interest rates, inflation, and even capital gain from domestic securities. While exchange rates are determined by numerous complex factors, they are often leave even the most experienced economic flummoxed. Investors should still have some understanding of how currency values and exchange rates play an important role in the rate of return on their investments.
So, as a conclusion, the impact of exchange rate volatility on real total export and the export. There is some evidence of exchange rate volatility to have significant impact on real export. The impact of exchange rate volatility on real export can be negative or positive. An increase in real exchange rate or the depreciation of real exchange rate will lead to more export in the long run. Export of Malaysia should improve the product through innovation and high technology. The export competitive of Malaysia would be improved. Also, an effective technology. Uh, an effective marketing approach shall be used to further promote the export of Malaysia. Export should be further diversified with more focus on intra-regional trade in EEZ, which would provide a good market opportunity for export of Malaysia manufactured goods. The more diversified of export market would result more stable of economy of Malaysia. Export can improve economic growth. Export can improve economic growth and can help Malaysia to transform its economy and to achieve its visions to be a high income country in the near further. Export sector create many employment opportunities. This can help to reduce the problem of unemployment in Malaysia. So that's all for me. Thank you.